This week in Billionaires, OpenAI announced a deal with chipmaker AMD on October 6th, with the AI firm agreeing to acquire and deploy 6 gigawatts of AMD's AI chips. The deal also gave OpenAI the rights to buy up to a 10% stake in AMD, which will vest once specific milestones are met. AMD stock shot up by 24% on news of the deal, boosting the firm's CEO Lisa Su's net worth by more than $200 million, up to an estimated $1.4 billion. Fermi America, a data center real estate investment trust co-founded by former Energy Secretary Rick Perry, went public on the Nasdaq on October 1st. The firm's shares skyrocketed by 55% on its first trading day, valuing it at $19 billion and minting at least 2 new billionaires, including Perry's son, Griffin. Perry himself holds a stake worth some $540 million. Elon Musk became the first person to ever reach a $500 billion net worth on October 1st, as Tesla shares rose thanks to renewed demand for electric vehicles and Musk's return to focusing on the business after his brief stint in government. Musk has also benefited from a higher valuation of his rocket maker, SpaceX, which was valued at $500 billion in a private tender offer in August, up from $350 billion in December 2024. Musk's 42% stake in SpaceX is valued at $168 billion, making it his second largest asset.
Welcome to Beyond the Billions. Joining me today is John Hyatt, a staff writer here at Forbes. He's been covering billionaires for almost 5 years, and he's written about everything from Elon Musk to online used car platform Carvana to most recently auto parts giant AutoZone. John, great to have you here. And to get started, what was the first car you drove, maybe in high school, and what are you driving today?
So today I'm driving a 2021 Subaru Forester. So
Nice.
Very conventional, very straightforward, very suburban, which is fitting for my lifestyle these days as a 30-something. Back in high school, I drove a Jeep Wrangler. It was a dream high school car, 4-door Jeep Wrangler, manual locks, manual windows that you had to roll up. And me and my buddies had a lot of fun in that car, doing joyrides, doing donuts in the snow in Colorado where I
was
grew
going to say
up.
very Colorado.
Very
Wrangler.
Colorado.
Yeah.
It's I fit the mold, the stereotype. But cars are really part of the American experience, right? Like all Americans look forward to their first car. They sometimes view their cars as their babies. And stores like AutoZone have really captured the market and profited from America's car obsession.
So let's take a little bit of a step back. What first kind of drove you to covering billionaires and, getting to what you're writing about today?
Yeah, billionaires are a great way to understand corporations and companies and how they operate. With businesses, you often see the personalities and priorities of their founders within those businesses. And at the same time, the businesses offer a great window into these founders. Who are they? How do they make their money? What type of company, what type of culture are they trying to create? And so it's a fantastic opportunity, the Billionaire Beat, to cover companies and to cover people and to understand how the two influence each other.
Yeah, and I know from working with you for many years now that you're a genius at looking at the bones of the financials of these companies. And I know you, like many people on our team, spend a lot of time on the SEC website and SEC filings. So what do you think that kind of tells us, that kind of research tells us when you're covering these companies? Like looking beyond sort of the headlines, I guess.
Yeah, covering public companies is so fun because, as you say, all the information you really need is in SEC filings that these companies have to report. The annual 10Ks,
Right.
The 8Ks, which are announcements of material events, the quarterly earnings reports. These
10Qs, right?
The 10Qs,
Yeah.
exactly. You clearly know your way around SEC Edgar, which is
part
the
of the job.
SEC database where all these filings can be found. And so, whether it's revenue, whether it's net income, operating income, whether it's material risks that a company faces, whether it's stock sales that executives are doing, it's all there in the SEC documents. So if you spend the time to read them, you can really get to know how solid or not solid a company's financials are.
And sometimes there's some like weird stuff like how much they're paying to rent the corporate jet to the CEO, or
Totally.
share pledges from the major shareholder and stuff like that. Right?
Executive perks, executive behavior, related party transactions, which are always interesting. Does the owner own some other private company that is doing business with the publicly traded company? If they are, then you'll see it in the documents.
Right. So you report on how AutoZone has been one of the best performing stocks in the last 2 decades, and how it's been able to do that through, various sort of financial techniques, I guess, that it's used as well. Tell us a little bit more about that, and how it's been able to have this incredible track record.
Yeah, so at the heart of AutoZone's success is really its financial consistency. Since 1987, and this company was founded in 1979, but I was able to get documents dating back to 1987.
It's hard to get some of those archived ones. But
it can be very tricky. You have to really scour the web. But AutoZone's revenue, so this is top line revenue, sales annually, has grown every single year since 1987. Not a single year of decline in sales.
Through recessions and everything throughout the whole time.
Through recessions, through the ups and downs of the economy, through presidential administrations, revenue has grown every single year. Operating income and net income, two equally important metrics by which you measure a company's financial health, those have improved every year but 3. So this is a company that year in, year out is increasing its bottom line and is increasing its top line. And so that's really the core of the company's success and at the heart of the company's stock market run, which has been fantastic since going public in 1991. And the reason that these that sales and income have been so consistent is because the car parts industry is just a fantastic industry to be in. And this is something that all the AutoZone folks I spoke to just told me straight up. This is just a great industry. This is an industry in which operating margins are very high. This is not like the grocery industry or the retail or clothing industry. Like this is a space in which you can really command a high price for the car parts that you're selling. And that's because everyone needs car parts. If you have a car, your car is going to break down. It is inevitable. And you are going to need to get a replacement part for that car. You don't have an option. You can't not take your kid to school. You can't not go to work. You can't not go get groceries. If you might want to only spend $300 for your battery, but if your new battery costs $400, you are going to find the money and buy that battery because you need your car. And so demand is highly inelastic, meaning, it is not that sensitive to price movements. So that enables a company like AutoZone, which has large market share, which has the incumbency benefit of having thousands of stores and brand name recognition. That gives it the benefit of just consistency, and you see that in the results.
So how did you find the story? I mean, were you, did your car break down and you needed a part and you went to an AutoZone? Were you looking at, financials of, the top performing companies? How did you come about it, and how did you, as readers will see reading the story, come to meet the CEO and the founder?
Well, I was actually reading a lot about Memphis, the city of Memphis. And I was reading about it because, as you mentioned, I've covered a lot of Elon Musk. And Elon Musk has a big presence in Memphis with XAI. He's been building this huge supercomputer south of Memphis. It's very controversial. It's ignited a lot of opinion.
A lot of energy usage.
Ton of energy.
Yeah.
And somehow, in the course of my research in Memphis, I discovered a foundation called the Hyde Family Foundation. And this foundation has doled out over $300 million to various causes in Memphis. And the person behind the Hyde Family Foundation is a gentleman named Pitt Hyde. He is an 82-year-old, and he is the founder of AutoZone. And so he's lived in Memphis his whole life. AutoZone is headquartered in Memphis. He's given a ton of his fortune back to Memphis. And so that led me to connecting with Mr. Hyde. I interviewed him. I went to Memphis and interviewed the CEO of AutoZone. I interviewed the former CEO of AutoZone as well. And I really got a great access into this business, into the people who built this business into the $70 billion market cap company that it is today. And, from there, I was really able to, as you said, dissect the financials and really get into the nitty gritty of what makes this a fantastic business. And that's how I found the story, and that's how I reported it out.
So you said Hyde is 87 now?
82 years old now. He founded the company in 1979.
Okay. And how was it meeting him? Is he still sort of really tuned into the company? I know that he's not sort of formally involved there anymore. And obviously he's now focusing on his philanthropy in Memphis, but how was it meeting him and also
Yeah.
the CEO, right? Like, how was that transition, I guess, meeting those guys?
Yeah, so I'll give a little backstory. So he founded the company as a division within the wholesale grocery firm that he was running at the time. So the Hyde family goes back to the early 20th century in Memphis when Hyde's grandfather founded a wholesale grocer. He built that into a $7 million revenue company by the 1940s, equivalent to $100 million in sales today.
That's huge for the time.
It was a big regional player. He passed it down to his son, who ran the business in the 40s, 50s, and 60s. And then Pitt Hyde, the third generation, basically inherited the role of CEO and president when he was in his 20s. He took it over and he continued to grow the company. But it was a really challenging time to be a wholesale grocer in the 60s, 70s, and 80s. Why? Because you had the likes of Walmart entering the scene.
Right.
So what does a wholesale grocery company do? They sell groceries to independent mom and pop grocers and smaller regional chains that then sell groceries to consumers, right? And so companies like Walmart, companies like Costco, companies like Kroger, these big national brands that we know today and which control so much of the grocery supply in the United States, these companies were really they were rising up during this time and taking over market share. Right. And specifically, Pitt Hyde's company was really losing out to Walmart because it was operating in the South, in and around Memphis especially, and that's where Walmart was opening up all of its superstores. And so Pitt said, what can I do to basically preserve the family fortune? I see where this is going for my family's company, and it is not going to be around in 20, 30 years.
How old was he at the time?
He was in his 40s.
Okay.
And so he was trying out different industries, and he landed on car parts because he saw this was a high-margin business that didn't have a strong national retail presence. And it was also an industry which didn't have a reputation for a pleasant consumer experience. This was an industry in which you walk into a local auto body shop and there's not pricing on the wall. You don't really know what you're doing. And, a gruff mechanic says it'll cost $500 to replace your battery or whatever.
Not much price transparency, right?
Exactly.
Yeah.
And so he said, what if I bring what I know about supermarkets and groceries and I take that and I bring it to the car parts industry? And that's what he did with AutoZone. And, through the years, it's proven its mettle, and the company has grown and grown and grown, and it's the company that we now know today.
And he was on the board of Walmart, too, at one point, right? Like right around that time of the transition.
Yeah, you're right. And that's what's really interesting is that he had a front row seat as a Walmart board director, one of the first two non-Walton family members to sit on Walmart's board in the 1970s and early 80s. And so he even helped Walmart establish grocery sections in its very first hypermarkets. When Walmart was pushing from consumer goods and dry goods into fresh produce, they actually hired him and his firm, which was called Malone and Hyde, to help design the groceries. So in a way, he was had a front row seat to and aided and abetted in his own family company's demise.
Well, I mean, it's turned out to be a pretty lucrative strategic move for him. And you wrote in the story that it's created one billionaire, Pitt Hyde himself, and then thousands of millionaires throughout the company and its employees. How were they able to do that? And I know you also mentioned in the story that it was through financial engineering, which as a term might have some negative connotations, but I think in this case, it's sort of more, strategic choices that they made. So how was Pitt Hyde and sort of his successors able to create this giant that has created so much wealth, both for him and also for thousands of employees that have been at the company?
Yeah, well put. Stock options have been at the heart of this wealth creation. And so to understand that, we have to go back to when AutoZone spun out from the grocery company.
Right.
So basically the grocery company was publicly traded. Pitt Hyde partnered with the investment firm KKR, and they did a leveraged buyout. They took the company private, and then they spun out AutoZone and sold the grocery business.
Also a big, time for leverage buyouts, right, in the 80s.
Big time for leverage buyouts. And KKR was It was not yet the infamous firm, but obviously KKR, became sort of infamous for its big $26 billion buyout of Nabisco.
Right.
It was chronicled in various books at the time, but KKR, to its credit, has always been looking to optimize employee commitment and productivity, and one way they do that is by granting employees stock. And so this is something that Pitt was also very focused on. How do I get my AutoZoners focused on driving growth? How do I get them motivated to come in every day and want to do their best? And they did that by issuing stock options. And so the company goes public in 1991, and at the time they had a very generous stock option policy. Thousands and thousands. At its height, about 40,000 employees of AutoZone, store managers, district managers, people who maybe joined as an hourly employee and rose to manage a store, they were getting stock. And they were buying stock because these are options, so they have to exercise those options, and they have to pay a certain amount to exercise the stock. But because the stock value has just been going up and up and up, all these people who were store managers, who maybe didn't have college education, just rose through the ranks of the company. They've accumulated incredible wealth through the stock options, and it's been very much a sort of incentive play of how do I get all these employees motivated and dedicated to AutoZone. But the other half of the financial engineering coin are the share buybacks. So share buybacks are a pretty popular strategy among publicly traded firms to drive shareholder value. You buy back stock, so there's less stock outstanding, which means price goes up. And so very simply, they instituted a share buyback program in 1998, and they have been consistently buying back shares since then. And so in 1998, there were 152 million shares outstanding of AutoZone stock. Today, there's about 17 million shares outstanding. And so they've really driven shareholder returns by buying back stock and also by that financial consistency we talked about. If you're doing a bunch of share buybacks and your business sucks, it's going to end in disaster. But when you're driving growth and driving returns year after year after year, it's really just part of their capital allocation strategy. They don't pay dividends. They haven't split the stock. The stock is trading at over $4,000 per share today. When it went public, it was about $12, $13, I think, maybe $20. I forget exactly. But that just shows this capital allocation strategy, it's all about driving shareholder returns. And in order to do that, if you're not going to pay a dividend, how are shareholders going to get rich? They have to sell the stock. So there is sort of this element of circularity here, right? You're issuing stock to employees. Those employees are getting rich off the stock by selling it. And then, well, who are they selling it to? Well, in part, back to AutoZone, which is buying back the stock. So it's a very clever form of financial engineering that they've put on top of this rock-solid business model. The genius who sort of architected this is the former CEO who I interviewed. His name is Bill Rhodes. He joined AutoZone from Ernst & Young. He was an accountant who helped take AutoZone public as a 20-something back in 1991. Pitt Hyde saw this guy and said, this guy knows what's up. He understands how to create shareholder value. He's just a whip-smart guy. He brought him onto AutoZone, and he sort of groomed him to be his heir. So Pitt Hyde stepped down in 1996. Bill Rhodes rose to leadership, and he led as CEO from 2005 until 2023. And now he's executive chairman, so he still has his hands in the AutoZone mix.
So you've just given us sort of like a fascinating look at the financial side, right, of their success. But how's AutoZone doing now? Because obviously, we can go back to your point on the Jeep Wrangler versus the Subaru you have now. Cars are getting more complicated, harder to repair, right?
Yep.
And then also, there's competition, right? And I know you wrote in the story that AutoZone has been expanding overseas as, there's less and less sort of DIYers in the U.S.
Yeah.
So how is AutoZone doing now, and what are its strategies to sort of keep up with these technological changes?
No, it's a great question. And so let's take a step back and look at the auto parts industry, also known as the aftermarket auto industry. This is a $400 billion industry in the United States. It's a large market, but there are lots of players. And so AutoZone has really forged itself as one of the dominant players in the DIY space. So this is the do-it-yourself space. This is the customer who wants to fiddle around with their own car. They want to change their own oil. They want to install their own windshield wipers. They want to really get in nitty-gritty with their car. And, it's sort of the classic image you have of the American car owner, right? Somebody who really takes pride in their vehicle and who sort of looks after their vehicle on their own. AutoZone made its bread and butter by dominating the DIY market, but the DIY market is shrinking. As recently as 1990, about 50% of American car owners identified themselves as do-it-yourselfers. But in today's world, only about 20% of the total market is DIY customers. The other 80% are the auto body shops, the professional mechanics, the car dealerships with auto body shops on site. This is where most of Americans now are going to when they have a problem with their car, when they want their oil changed, when they need a new part, when their battery fails. Like, they're going directly to the professionals to fix it. And because, as you say, that's in large part because, one, cars are increasingly computerized, right? They resemble more like Elon Musk's XAI supercomputer than they do your 1920s car with the engine and, the traditional like thing that you could sort of fix up on yourself. Two, more cars are foreign made. And so that sort of institutional knowledge passed down from generation to generation of how to, fix your grandfather's Chevy. Well, now you might have, like me, a Subaru made in Japan. And that's my dad or my grandfather won't know how to fix a Subaru. They grew up with American cars. And so there is a loss of sort of institutional knowledge of how to fix up cars. But three, and this is, I think, the biggest threat for AutoZone, is that the DIY market faces it now is not just AutoZone and O'Reilly and other car parts companies. It's big box, it's big tech, it's Walmart, Costco, Amazon, eBay. These companies see how lucrative the car parts market is for AutoZone, for O'Reilly, and they say, we want a piece of that pie. And so now AutoZone is up against the likes of Walmart and Amazon. And to give you an example of this, I want to talk to you about your classic DIYer, who happens to be my brother-in-law. So this is a guy who very intelligent with systems. He works on Navy ship. He fiddles around with cars like you and I watch TV for fun. He literally bought a, the Subaru Baja. Have you ever seen a Subaru Baja?
No.
It is like this god-awful, ugly car.
Subaru runs in the family, though.
Subaru runs in the family, absolutely. And it's like a four-door truck, but it's a Subaru. Anyway, my brother-in-law bought a totaled Subaru Baja just so he could dissect it for parts.
Okay.
So he could fiddle around with his other Baja, or his other Subarus. So this is like your classic DIY guy. And so I asked him, I said, Matt, where do you buy car stuff today? He goes, oh, Walmart. Like, Walmart is my go-to. Like,
it's also kind of going back to the AutoZone story that he set up AutoZone to get away from Walmart's competition, and then now, 40 years later, it's coming full circle. Right?
You're 100%. That's one of the funniest parts of this story is this sort of intertwined nature of AutoZone and Walmart, and how AutoZone grew out of Walmart, and now it's competing with Walmart. So you're absolutely right there. And so I say, so where do you get your stuff? He says, well, Walmart. Oil filters, air cabin filters, shop towels, oil replacement. I get that all from Walmart. And if not from Walmart, then I get it from Amazon. I look at prices, but typically Walmart is the better price. He doesn't really even think of AutoZone when he thinks of where am I going to buy these things for my cars, because Walmart can deliver the same day. Sometimes they can deliver within an hour. And so I think he, as your sort of DIY customer, is a great example of a shifting trend among especially young people like him. He's Gen Z, who are so used to shopping online, who are so used to buying stuff from massive corporations like Walmart, like Amazon, like we all do. And, he sees that they have what he needs at the price that he wants. And so he goes to Walmart. And so those companies pose a big threat to AutoZone, because AutoZone still depends on the DIY market, and it wants to, entrench itself as a dominant DIY player. But to do so, it has to fend off some of the most well-capitalized corporations in the world.
And so, after having covered AutoZone, have you been there recently? Like, are you a customer yourself?
I'm not a customer of AutoZone. Actually, a couple months ago, my Subaru's battery died. And unlike my brother-in-law, I'm not a car guy, so I don't know what the heck to do when my battery dies. I called AAA. I asked them to tow the car to my local Subaru dealership where my wife and I bought the car about a year ago. And they ended up selling us a new battery and installing it. It cost over $400. While I was reporting this story, though, I went to an AutoZone near me just to kind of check it out, see what the vibe was like. And I spoke with a representative there, and I asked him, like, hey, I had some battery trouble recently. If I were to buy a replacement battery for my Subaru, how much would it cost? And he showed me two options. Remember, I paid over $400 to Subaru dealership and their professional auto body shop. At AutoZone, the two battery options that he gave me were, I think, about $280 and maybe $330. So two options that were considerably cheaper than what Subaru sold me. And not only that, but, and this gets to part of AutoZone's key selling point to customers, is not only will we sell you it cheaper, but we'll install it for free. Their store in staff, their retail staff, they're trained to do that sort of service work for free. And so they're hoping that they can continue to grow in the DIY space through that commitment to customer service that Pitt Hyde crafted and instilled all those years back when he was launching his first auto parts company. And so, sure enough, as AutoZone executives told me, the store hands will install your battery for free. And he offered to do that. And I said, darn, I should have done this a couple months ago rather than gone to Subaru. I could have saved $100. And so I think that does sort of show you how AutoZone still has its perks and it still has its advantages in the DIY space. But to get to your question too about, like, well, how are they going to keep growing? It's all about the other 80% of the market, known as, in contrast to DIY, the do-it-for-me market. So this is the auto body shops, the professional mechanics. AutoZone is growing in this space. O'Reilly is the leader, and O'Reilly actually trades at a higher market capitalization than AutoZone.
And they have a jingle, well-known jingle.
They also have their well-known radio jingle, O'Reilly Auto Parts.
Okay.
And AutoZone, to its credit, has its own Get in the Zone, AutoZone.
Yeah.
But anyways, so O'Reilly is the leader. AutoZone needs to catch up, but it's doing that. It's building more warehouses. It's building these massive distribution centers that can hold over 100,000 car parts. And it has incumbency benefit, right? Like, it has its diagnostics database, which allows AutoZoners to identify the part that your 1998 Toyota Camry needs in order to keep driving. It can do that in a way that Walmart and Amazon, they don't have that institutional knowledge. They don't have that database. And so even though it has to catch up in the do-it-for-me space, AutoZone is very well positioned to do that.
Well, this really gets at the heart of sort of why this company's done so well, and even proving to you when you had a problem that it would have been a better option. But John, thanks so much for joining me, and I encourage everyone to read John's fantastic story. You can find the article and other articles that John has covered on Carvana, on Elon Musk, and others in the interview notes.